It's time for Business Incorporated, and here's what's coming up to you this time. We'll tell you that Ghana's government has released 2.4 billion cedis to settle coupon payments of first matured coupons or bonds. And from there we go to Kenya, where the country is seeking 21.66 billion shillings loan from the African Development Bank. And Egypt's prime minister has ordered an amendment to some provisions of the country's capital market law. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. Let's get right into it, starting with the market numbers for intraday in Nigeria. We see a sustained positive sentiment at the NGX, 0.66% at intraday today. Good one that we see there, hoping we'll get back to that 65,000 in no time. In South Africa, it's also positive, 0.11%. EGX30 of Egypt is also positive, more than 1%, 1.35%, while Kenya is the only one on the flip side, but this is for Thursday. It closed negative at 0.48%. That's for Kenya. We move over to the Middle East now to see how the numbers are looking at intraday, and we can tell you that it's a whole lot of positive. In fact, it's all positive for major markets right there for intraday. We see Abu Dhabi unchanged, but positively, it's a positive sentiment right there going through the markets as Abu Dhabi. Dubai is 0.41%, almost 0.5% positive. And then Saudi Arabia, 0.06% positive. And Qatar is also positive. What a positive Tuesday we have today on that continent also. Let's move over now to the United Kingdom, where Teniola is standing by. Teniola, we have unfinished business from Business Morning, talking about that Office for National Statistics, and talking about public sector borrowing, which excludes state-owned. But I think we'll have to give Teniola a couple of minutes more, then we'll get back to that conversation which we carried over from the Business Morning earlier today. For now, let's go to Berlin and see what's going on there. We can tell you that a German company has discovered an oil field in the state of Hesse. Lars has more details. Sounds familiar to us in Nigeria. We deal with oil, Lars. Good afternoon. So what more can you tell us about this discovery?
Yeah, thanks for having me. Indeed, oil reserves were discovered in the town of Riedstadt, which is located close to Frankfurt and right on the Rhine River. The company behind the discovery is Rhine Petroleum, and it's been drilling in that particular area for a while. And with some success, the company is currently extracting oil from several spots. But this latest discovery at a depth of 1,700 meters, by the way, is bigger than expected. That's according to the company's own analysis. And what makes this really interesting, the quality of the oil is said to be very high. It is light, low in sulfur, and rich in other ingredients.
Well, at a time when the world is trying to run away from oil, but will this discovery solve Germany's energy crisis?
No, sadly it won't, because this kind of oil is not even best used as an energy source at all. It will rather be used as an ingredient in high-end plastics as well as in pharmaceutical products. But that's just as good. Oil has these two equally important uses, as an ingredient and as an energy source, same as natural gas, by the way. With oil, only 2% of what is used in Germany is actually extracted there. No surprise, of course, as Germany is simply not much of an oil country, but will always be an importing nation. Funny fact though, the first time oil was actually found in Germany was in 1859. And that was 3 months before the first drilling started in the United States. During the 50s and 60s, the annual production rate was at around 8 million tons, and today it's down to around 2.5 tons. That's around 18 million barrels. That, of course, pales in comparison to the 750 million barrels Germany is using every year, most of which is from the US, Canada, Norway, the United Arab Emirates, and Kazakhstan.
Yeah, well, I wonder what this will do to companies around the oil and gas sector in Germany.
Yeah, considering these numbers, a little oil discovery in Germany will not have much of an impact at all. It's meaningful, of course, for the company that is extracting, Ryan Petroleum, as I mentioned, but in the big picture, neither oil shares nor the general economy will see much of a reaction here. Oil companies, by the way, have been doing pretty well as of late, and that is despite worries about the strength of the global economy. That, of course, could change if we are seeing more of a slowdown, because weaker economic activity would mean less demand for crude. And with potentially sinking oil prices, we would probably see some negative effects of that.
All right, Lars, thank you so much. We wish you all the best there in Germany, turning to an oil-producing country at this time. Okay, so now let's move over to South Africa and see what's going on there. Remember that BRICS Summit begins today, and we've been feasting on that. Well, we can tell you that the Chinese President Xi Jinping is meeting with South African President Cyril Ramaphosa in Pretoria, in South Africa. The Chinese leader is on a state visit to the country, which comes ahead of that 15 BRICS summit. Leaders from Brazil, Russia, India, China, and of course South Africa are attending that annual gathering, which opens today. Also important to note that Nigeria's vice president arrived there last night and is also participating in this BRICS summit. I will certainly give you more on that, on the BRICS meeting, and some other stories, from our Russia invasion in the morning to your business programs, both in the morning and in the afternoon. We'll certainly give you updates on that. Let's go back to the markets now and tell you that Asia-Pacific markets are mostly up today, even as yields of U.S. 10-year Treasury bonds hit levels not seen in over a decade. Japan's Nikkei 225 climbed 0.9597%, extending its gains. Elsewhere on the region, we see that South Korea's Kospi also gained 0.28%. China's Shanghai Composite was up 0.88%. Hong Kong's Hang Seng Index snapped a 7-day losing streak and gained 1.07% in its final hour of trade, while the Australian S&P AX 200 hovered just above the flat line and ended more than 7,000 index points. The benchmark is a 10-year Treasury notes yield that hit a high of 4.34%, reaching its highest level since November 2007. This is a notable one, as higher bond yields generally mean lower stock prices. In the United States, stock futures rose on Tuesday as Wall Street tried to build momentum following positive sessions for the Nasdaq Composite and S&P 500. Futures tied to the Dow Jones Industrial Average climbed 0.1%. S&P 500 and Nasdaq 100 futures both added 0.3% and 0.4% respectively. On the economic data front, Wall Street will be looking towards the Philadelphia Fed's manufacturing survey, as well as the Richmond Fed's manufacturing survey results. Existing home sales data also will be coming out for July, and also scheduled for Tuesday. Well, traders are also anticipating Fed Chairman Jerome Powell's remarks at the Jackson Hole on Friday. A lot of data to look out for, and to give more insight to the central bank's inflation outlook and resolutions. Let's go to commodities now. Oil prices moved slightly lower today as investors remain downbeat on China's economic hobbling demand from the world's top crude importer, and that has limited impact of supply cuts. Brent crude was down 43 cents to $84.03 a barrel, while the more active U.S. West Texas Intermediate crude for October contract slipped 32 cents to $80.40 a barrel. The front month WTI contract that expires shortly was down 4 cents at $80.68 a barrel on a very limited volume of trade. China, which is the world's second largest economy, is seen as a key to shoring up oil demand over the rest of the year. Meanwhile, the U.S. is expected to continue to draw down stocks. A preliminary poll shows that crude oil and gasoline inventories were expected to have fallen last week, with data from the American Petroleum Institute, which is due later on today. More commodities now. Gold prices rose above 1,900 per ounce level today, helped by a slight pullback in the dollar and bond yields as investors await the Jackson Hole Symposium, which is on later on today. That's on Friday. Spot gold was up 0.4% to $1,902 per ounce. U.S. gold futures gained 0.4% to $1,931.30. The dollar fell 0.2% against its rivals, making gold less expensive for holders of other currencies. Our benchmark 10-year U.S. Treasury yields retreated after hitting levels not seen since November 2007. Gold prices are currently trading below the key 50, 100 and 200-day moving averages. Spectators who trade on technical signals regard a break below key moving averages as a bearish sign. In other metals, spot silver gained 0.3% to $23.42 per ounce. Platinum gains at 1.1% to $919.15. Palladium rose 1.1% also to $1,259.33 per ounce. Welcome back. It's still on Business Incorporated here on Channels Television. We head straight to our London studio. Teniola has been waiting to have this conversation since morning. Hi, Tenny. Good to have you again. So, I mean, you whet our appetite in the morning talking about the government borrowing. Give us more details about it and the position or status at this time.
Yeah, hi, Annie. So it's good to see you again. A bit of mixed news. On the plus side, public sector net borrowing came in lower than forecast, but it's £3.4 billion more than what was recorded last year. And more concerning is that 4.3 billion, that figure was the fifth highest July borrowing figure on record, and that's been since 1993. The government paid debt interest of £7.7 billion, which the Office for National Statistics also said was the highest total for July on record. But focusing on the plus side, we see that the higher than expected tax from self-assessment and VAT returns boosted the government's finances last month, as well as, higher wages. And this has raised the prospect of potential tax cuts ahead of the general election. Unfortunately, though, those hopes have been dashed a bit this afternoon with, rising interest rates, increasing the cost of servicing the government's debt. The Chancellor, Jeremy Hunt, has played down that possibility, and, he looks likely to continue to keep a tight grip on public finances for the meantime, Innie.
I wonder if the borrowing has any grip on the markets.
Yeah, the markets have been pushed higher today as public sector borrowing slowed in July, and also affected by factory output, which fell at the fastest rate since September 2020. The all-share index is up 0.66%. The FTSE 100 has broken its 7-day losing streak, up this afternoon by 0.65% at 7,305 points, while the domestic market, that's the FTSE 250, is also up 0.85%. In the currencies market at intraday, the pound is up against the US dollar by 0.12%. Against the euro, the pound sterling is also up 0.17% higher, but the pound is trading lower against the Japanese yen by 0.32%, following overnight gains by technology-related shares in Tokyo, Innie.
Thank you so much, Tenny, for that update. Thank you, and enjoy the rest of your day.
You too, Innie.
Let's take a very short break now. We'll be back to discuss maize.
34 million hectares of arable land. Over 200 million people. One nation. Home to Africa's fertilizer company. Fertilizer, pure urea fertilizer. With one single-minded passion to feed Nigeria. Every bag is a potential, an aspiration to turn this green nation into the biggest food basket of Africa. Dangote Fertilizer.
Welcome back. It's commodities time, and there you see right there, it's time to discuss maize, and we can tell you that the consumption of maize in 2022 was estimated at 1.16 billion metric tons, of which 60% of that was used for livestock feed, and yes, they feed the chicken that produce the egg that we all consume, 30% for industrial processing, and the rest for direct human consumption. Of course, this has also affected the price we've seen over time, but let's get more details on that with Daniela Omobudede. And Daniela, good afternoon. So we know that obviously with this increase in demand, there's also an increase in prices generally, apart from for maize. And then the fact that we have the Ukraine war and the end of the Black Sea deal, a grain deal, has also added pressure to the price of grains, including maize.
Good afternoon, Ini. Thank you for having me.
So what would you say about the movement, the price movement of maize, with all of these factors I've noted?
Yes, so in the past 3 years, we've seen that the price of maize has tripled, with a ton increasing from about 70,000 naira to 250,000 naira. And the main reason for that is the high demand for maize. So we can see there's the competition for maize between the industrial use, direct human consumption, and the use of maize for poultry feed has fed into the price of maize, and also the supply chain disruptions caused by the Russia-Ukraine war. We all know how the demand and price dynamics work. So as the price of maize has increased, maize is a major element for the poultry industry as it is used to produce feed, which constitutes about 80% of their cost of production. So as price of maize increases, definitely the price of poultry feeds and all of that are going to increase, and that might eventually feed into the price of livestock such as chicken and turkey that they sell to their customers. And then other maize derivatives such as ethanol and cereals like Golden Morn that are produced from maize, the cost of producing them is also going to increase, and that's going to affect their affordability.
So because of this, do we see people shifting to alternatives like sorghum and all of that?
So the shift to sorghum, owing to the fact that it's kind of a substitute, sorghum, that's Guinea corn, owing to the fact that it's a substitute for maize, corn, is dependent on numerous factors, including its availability, the cost, processing methods, taste, and consumer preferences. And it's also going to have some, economic implications. So we might see a change in supply chain and processing methods. For example, breweries that use sorghum produce with sorghum, they are most likely going to see a change in their processes, and that might lead to some cost implications for them.
And we look at Nigeria, and another sad factor that Nigeria is supposed to be the second largest producer of maize. Obviously, we're not even meeting up with that, because we still have to import about 400,000 metric tons every year to meet up with our domestic needs. I guess the militating factors are not more than what's stopping other agricultural produce, security, fertilizer, pests, and all of that.
Yes, yes. So basically the same thing that we all talk about every day, the inefficient farming methods, the challenges with storage, distribution, and transportation, which lead to post-harvest losses and insecurity issues. And those can kind of be helped or solved in some sort of way, like introducing improved seed varieties, like better maize seed varieties, improved agricultural practices, investments in infrastructure and irrigation, just basically things to incentivize maize production in the country.
All right, Daniela, thank you so much for sharing your findings with us this afternoon. Daniela Mobudo is analyst with Financial Derivatives Company. Let's go to Kenya now, where the country is seeking a 21.866 billion shillings. That's about $150 million loan from the African Development Bank to connect homes to electricity under the third phase of the last mile connectivity project. The AFDB disclosed that the Treasury has applied for the $150 million in a review of the program to be rolled out before the end of this year to light up an estimated 150,000 homes in 45 counties that exclude Nairobi and Mombasa. The funding, if approved, will be in addition to the $26.76 billion shilling that Kenya Power has so far received from 3 multilateral lenders meant to connect 280,473 households across 32 counties. The program will increase Kenya's power customers past the 9 million mark, despite questions over the revenues from homes connected to electricity under the last mile plan. The third phase of the last mile program is set to start in November and will take an estimated 5 years to complete. And this is according to AFDB. And in line with government's commitment to the continued success and credibility of Ghana's domestic debt operations, instructions have gone out for the settlement of the 2.4 billion cedis first coupon payment of the domestic debt exchange program due today. In a Twitter post, the Ministry of Finance said that the government has issued instructions for the settlement of first matured coupons of bonds under the domestic debt exchange program, as it remains committed to the success of the new bonds program. In all, the government is expected to settle nearly 2.5 billion cedis to bondholders by the close of today. Government in February this year successfully restructured some 87.76 billion cedis of existing bonds to 16 new bonds with varied maturing dates ranging from August 2027 up until August 2038, while offering varied interest rates of up to between 5% and 15% on the new bonds to be paid semi-annually. And finally, Prime Minister Mustafa Bonboli has issued a decision to amend some provisions of the Capital Market Law, number 95 of 1992. The amendments include allowing the issuance of a Sukuk program in several versions, creating and organizing sustainable development investment funds, and expanding the scope of work of traded funds. The amendments also introduce a new type of investment fund, namely Sustainable Development Investment Funds, to encourage this type of investment to keep pace with the latest developments, among others. Chairperson of the Financial Regulatory Authority, Mohammed Fareed, said that the Prime Minister's decision to amend some provisions of the executive regulations of Capital Market Law has allowed the issuance of a total program of Sukuk to be offered in several issuance according to the controls that were issued by the authority's board of directors. That's it on the program today. Thank you so much for being a part of Business Incorporated. A fresh episode comes your way tomorrow. Do join us then. I'm Ini John McQuarrie. But first, I'll see you 10 a.m. tomorrow, God's grace.